What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Lab. It is once again the start of another new week, another great episode of live market analysis, where we come here and we show you what pairs you need to look for this week, what levels you need to keep your eyes on, and how to effectively use those so we can make profits this week. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures. And of course, I'm here with my guy.
You know it's the one and only at I'm the D guy, or aka Pearl Financial. I hope you guys are prepared for today, this new week, this new trading week. I know the market has been doing some crazy things, so we're just gonna recap on some of the things we talked about last episode. So let's not take no more time. Let's just hop right on in.
All right. So with that being said, man, let's go ahead and jump straight into these charts. Before we do that, let's really quick go over the schedule for this week. Of course, you guys know Tuesday and Thursday will be here, 9:35 p.m. Eastern Standard Time once again. And on Friday, of course, live trading session, 9:10 a.m. Eastern Standard Time. You know how we do it. So let's go ahead and kick this off the right way. So let's start off with US 30. Now that right there, one of my favorite pairs. You guys know about that one if you are a frequent guest on the stream. And for everyone new, the Dow Jones is a representation of what the economy is doing and what the overall stock market is doing. 30 of the best companies from all the different industries around the country, all coming together to give you a good economic indicator and stock market indicator. Now, we know over the history of the Dow Jones, we can go back as far as like 1900 something and look at how far the chart has moved since that time period. The chart has been in a consistent uptrend for a very long time. And one thing I can say is that there has never been a dip on the Dow Jones or a crash that has never been recovered from. They all bounce back. It's just a matter of timing. And that kind of leads us into the chart action that we're looking at right now. Last week we were telling you guys that things might be looking funny if what used to be a lower high right here continue moving down. But we know one thing about the Dow Jones, even when things look like it's just about to fall apart. Because if you take the chart and erase all of the things that were on there up until that point, it looked bad. Especially when we just had this one candle, you couldn't see anything else. But the Dow Jones has a tendency to go up no matter how bad things look. So we ended up forming a double bottom. Very important. Now, what I want to point out are these wicks down here and where the lows started to kind of come into. It came into an area, if we follow to the left, that used to be previous support. Now, it went past that level a little bit and actually came all the way back down to this little wick right here. If you guys pay deep, detailed attention to our streams, you know that D has pointed this wick out a couple of times and said, up until this point, this used to be an all-time high. So for us to see prices actually come back to that level is extremely interesting. Let's bring up our support and resistance. We can actually see that we have levels marked up right there. And that wick came right back to that level and tapped up off of it perfectly. From that point forward, we have a double bottom right here. You can kind of consider this a higher low. And from that point, we're moving up. So all we have to do now is we're still hanging around this lower low that we were talking, lower low we were talking about, lower high we were talking about last week. We still need to break past it. With the momentum that we've been seeing so far, that's what I expect. But of course, nothing is guaranteed. So let's drop down to the hourly chart to figure out exactly how we can play this. Now, what I want to point out is this double top. Remember last week we were talking about the higher, the lower high, right? That lower high was formed by this double bottom, and that double top. And from that double top, we fell about 1,000 points. So that pattern held up perfectly for all of my chart pattern traders out there. And ever since that point, we had the sell-off, as we saw earlier. But ever since then, higher highs, higher lows, higher highs, higher lows. We're coming back up. Let me put on the support and resistance. We're coming back up into the double top. This right here represents the price action for today. So May 25th, from this point on to the left. Notice how prices consolidated around that same double top area. They never broke above it. They came back down into the levels. They found a little bit of support, and it looks like this overall pattern from the beginning of the day was really the test of the resistance. With the way that the uptrend has been moving, one thing about uptrends, they always respect major resistance. So even at a major level, don't just buy at the top because it's probably going to pull back. But if the pullback is small, like we see right here, there could be a good chance that sometime during the night, the buyers come back in and push prices higher past that double top. So we'll have to see how that happens. Right now, I would say I'm sitting on the sidelines because I would say the buyers are probably 90% in control, but sellers still have that 10% that they can use on the market as long as this double top has not been passed. So once I see that double top get passed, that's 100% confirmation for me to go long, and I'll be waiting for that move to happen. So we checked the 1 hour, the 4 hour is pretty much the same picture. So for me overall, I'm waiting for better opportunities, but anticipating the long, just waiting for my time. So with that being said, let's pass it over to Darren. Let's get his thoughts on this pair today.
All right, so let's just take away that volume and bring up my moving averages. So like Tiberius said, US 30 is pretty much like a mirror image of what the economy is, the top 30, you know, firms in the country. And it's just pretty much a reflection on how it's doing and how the economy is doing as a whole. So that's how I kind of think about it. So with that, even just knowing, you know that this is just a consistent up type of thing. And even when we look at it on the monthly, it's just going up. Like it has its times where it goes up, like comes down, but the majority movement of this pattern pretty much has been up. So, same thing as, last time, we're just always making sure we don't overlook anything. The 20 is above the 50 and the higher highs have been broken. So that red wick was pretty much for me a good level for me to see for the market to come back down. And I say that because I think that candle was the actual initial trigger of the break to me, because before that candle, it was just the double tops. So we had the double tops, and then that red candle, I guess, was the pullback or the retracement that came down and touched literally by hairs the previous highs of before. So got straight up. So that's the only thing we're looking for in the monthly. We're not getting too much deeper in this one. Let's drop down to the weekly. So we're just pretty much making sure the 20 is consistently over the 50, which it is on this one. On the weekly we drop down. We still have higher highs and higher lows being formed, in its own little small way, because like Tiberius pointed out, which we're gonna get to soon, is that soon as those double tops have to be broken before we can even think about buying. So let's drop down to the daily. Let's get to those double tops that Tiberius is talking about. Zoom in a little bit. So we had that high, and we came up to 34,750 or even higher, set 35 even. Nice little hammer candle formation that formed, which is an automatic reversal sign. The market shot straight down with revenge. Like it came all the way down, broke through the 20, and even tapped the 50. So that lets you know the market respects the moving averages as a whole. So I think, like I told you before, anytime you see the market like gapped away from the moving averages, because the market plays very close to the 20, but from time to time it finds its way back to touch the 50. In this case, the market was farther enough. We had the reversal from the top, and the market came all the way down and found its resistance at the bottom at the 50. But notice, like Tiberius pointed out, those wicks, if we slide it over to the left, hit this last high, which we said was a previous high at one point in time. So that was the area that we knew that was, at first, when you don't see none of this, is like, is it possible the market can possibly come down and touch it? It's like it's even questionable. But then, like we always say, anytime the market breaks a previous high, it almost comes back to ask permission. Like, are you sure you want us to break it? There are times where the market is so strong in that direction where it doesn't have any momentum to come down and touch that previous high. But more so often, the market comes down and retouches the previous high. So since we have a confirmation, like I said, by the time we get to the daily, we've determined that on the monthly, weekly, and the daily, the 20 is above the 50. We've been making higher highs and higher lows just ever since of March. We've just been making higher highs and higher low. But where we are right now is a consolidation area, and I felt like where Tiberius has the mouse at right there, to me, kind of looks like a Head and Shoulders, and I'm saying that's the right shoulder, and I'm saying maybe the left shoulder was over there, but I just feel like maybe it was a little low for it to be the shoulder. So I don't know. I just feel like this pair is just full of Head and Shoulders and double tops. So even though that Head and Shoulders was a little stretch, we can definitely for sure see the double top on this right side of the big movement that happened down. So we have that double top. So until that area of the 34,415 is broken, we would need it to actually break it and come back down to retest, because like Tiberius said, we never want to buy in at a high price. We want to buy low and sell high. So let's actually drop down to the 2 hour first, and then we're going to drop down to the 5, because the 5 minute to me is that how high is high and how low is low. So um like Tiberius, so unhide your your signals. Yeah, so where that Tiberius has that circle, I would actually put like a little zone right just on that one wick right there. Triple zero. Can you actually do that for me? Put a rectangle on that one candle and double zero me. So with that zone right there kind of being formed, that gives us like a little roadmap or like a blueprint on what we're kind of looking for. So we're pretty much looking for this blue zone to be broken and retested. That retest is kind of very important because, like we said, we never want to buy at the top. We want to see it go up, come down. We buy in on the dip. I don't know if you guys ever heard of that phrase, but that's kind of where it comes from. It's like you buy in on the dip when it comes down, and it's actually a good example is kind of where we are right now. We kind of came up, hit the zone, came down, hit, and actually go to that bottom candle, the red one. Yep, and now slide that all the way over to the left. So to me, that little what I think I've researched is called like a sell block or an order block, pretty much where orders were pretty much placed and they were never filled. So the market actually finds its way back down to fill those orders. It actually came down perfectly, and actually I want you to slide it over even more. Come all the way pretty much over to the side all the way. Keep going. Keep going. Keep going. Right there. Now go to that. Yep, that red candle. So pretty much when you take all of this away, move the chart over a little bit more. I want to see something. So pretty much before all of this even has happened, that one high area was considered a high area at one point in time. Obviously, the market played out. It made a higher high, and it made it all the way lower low. But before all of that even happened, these were two high areas in which the market struggled at one point in time. It even was a double top before it took off to the upside. But if you knew that the market plays very close to the 20, that pretty much little wick off of the 20 should have been kind of like a signal, like, oh yeah, we should definitely be going up. And that's actually what it did. So let's go back over to where we are now. So being that we came down to that high area, bounced right off of it, and now we're hitting the 20 moving average. I think now we need to be patient because I kind of see a head and shoulders pattern right here, which this is the right shoulder being formed. The head is actually sitting in the purple zone, and if you follow that price all the way over to the left, that is the left shoulder. Go on a green line and follow it over to the left. Right there. So that right there is a left shoulder, and I see a right shoulder being formed. And if that price right there can be respected, I think that we can see the market coming down, at least coming down to either retest that low or to go down all the way back down. But in my opinion, I feel like the market is definitely going to be going up. I would have to just stay on the side of buys right now. So I would be just looking for the market to either to break the 20 moving average and the zone, and I'll be looking for a retest. So actually, I would need, yeah. So pretty much my prices would be somewhere at the 20 moving average or the zone, but I want it as I will place the order as a limit. So I want it to come all the way up, but I don't want it to get in until the market comes back down and then reverses back up. So also what I'm thinking, maybe I should be a little bit more cautious and then put my entry at the top of the head, but I feel like that's a little rushing. So I pretty much want to kind of wait and see what the market does where we are right now. So I would have to agree on Tiberius on this one. Actually, go over to the 5 minute before I say that. Yeah, so where we are right now is looks like a very important resistance level, and I feel like I would have to agree with Tiberius and kind of wait for a little bit more confirmation. But I can definitely see it coming back down to the 20 moving average. I mean, excuse me, the 50 moving average, where that high is formed at 34,375. I bet. Yep, 34,375. I can see it coming back down there. If we can get the market to stay above that price right there, I think that would be a good area, a low enough area price for us buyers to want to hop back in. But like I said, we would need a complete one come down to that area, but a complete candle showing that the market found resistance and is now heading up. So, like Tiberius said, I think I will kind of stay on the side, but sellers. I think you're pretty much set up right now is pretty much where we are right now, which is considered the neckline. I think if you guys can get that neckline to be broken, I think you guys can definitely take it back down to the 50 for us buyers to want to get in. Buyers, like I said, we would need that sell to happen before we get in for a buy. So I think I say this a lot of times in our stream. For every good buy move, we need a sell, and for every good sell, we need a buy move. So if you understand that, then you totally understand the buy low, sell high concept. So with that being said, I'm going to stay on the side of the buyers, and I'm looking for prices to come back down to 34,375, and that'll pretty much be my area in which I'll be looking for the market to find resistance. That's my overview.
Here we go. That's US 30 for you guys. The Dow Jones representation of both the economy and the stock market. So keep your eyes on this pair throughout the rest of the week. And that brings us to the second pair that we have in the lineup tonight. Let's talk about a little bit of currency. Let's talk about dollar Swiss. Now, this one has been trending a lot. The trend has been picking back up. I really like that because you guys know I love to follow dollar Swiss. The downtrend has been pronounced for a very long time. Since it's the beginning of the week, let's go ahead and start our top-down analysis on the weekly chart. Let's go back to our starting point from 2019 back in April. Since that point, prices have fell from $1 all the way to 88 cents, a continuous downtrend for 2 years. So that pretty much sets up the overall picture for what we're looking at when it comes to this pair in particular. And if we look at what's been going on since March, the downtrend has resumed. Every candle on the weekly has been red since March 29th, except for one. And even that one that was green was still a little hammer and was only a couple, maybe 10 or 20 pips away from being a red candle. So for 2 straight months, we've been going down. So that paints the overall picture for what we're dealing with right now as we drop it down to the daily chart. Now, on the daily, it just looks textbook. You want to talk about a downtrend, this is perfect. We switch it to a line chart just to see how perfect it is. Notice how prices, they make a lower low, right? They come back up, they retest what used to be the last high. They fall back down, they make a new low. They should come back up to test the last high right here. We scroll across, what do we see? The last high get touched. So we're continuing to see that pattern down, down, down as the market continues to move lower. So that's what we like to see. That tells us that the market is for sure trending right now. So what I want to do on the daily chart is identify a few levels that we can look at for targets for potential short trades. The first one that pops out to me is this small little crevice right here at 88.85. Notice how prices kind of stayed around this area for a long time. Not only did this used to be resistance, but once it got broken through, it turned into support. So we know that that duality level should be important as prices come back down into that area. So that's the first one I would mark off. 88.85. The second price level
what
that
is it? Which one
it
you
was
said?
88.85.
88.55?
85.
85. So pretty much 8885.
Mm-hmm.
All right. And you said the other one was 88750?
So the next level, let's see.
Yo, you heard me?
Yeah, can you hear me?
Yeah, the other level was 88752.
Let me see.
Not
so the
two,
next
but
level, the next level is 88. I mean, excuse me, 87. Let's call it 8750.
so 8750.
Yep.
So the two levels you're talking about is 8885 and 8750. All right, perfect. Just want to make sure I get the levels.
So those are the levels I'm looking for prices to come back to on a long-term basis. Now, when we break this down to the smaller time frames, let's go down to the hourly. We can really pinpoint where exactly we want to get in and find the best levels and best risk to reward scenarios for our potential trades. So, as you know, in the downtrend, you guys, we want to look for higher prices that we want to short from. So we need to look to the left and find resistance areas. Now, on the hourly chart, I'm not going to lie, this hourly chart is looking kind of crazy. It's not as clean as the daily chart was. But that's no problem, because whenever we see a chart like this where we could point out some lower lows, like we have 89.50 right here. We also have 89.60. And then, 90 cents above, but it's a very choppy range. In those scenarios, we bring back up our quarter levels. So we can automatically know 89.50 for sure. We're trending around that level right now. 89.75, if we look at that level and we follow it to the left, boom. That was actually the last highest price before we started this next leg of the down movement. So in my opinion, if we could see prices come back up, retest that area that the most recent down move just started from, that would actually, in my opinion, probably be one of the best prices we could take that trade. Now, next up, I would say probably 90 cents. Now, I don't think that level could get hit, but anything in the market is possible. So I would say best case scenario, you put your order there, and if it gets hit, hey, you better do a praise dance. But if not, I would say take your orders for the sales at 89.75. That would be the higher price to short from right now, in my opinion. So those are the levels I would.
89.75. Okay, I got that one.
Yeah. So those are the levels I would look for. 89.75 for the entry, and then 88.85 for the profit targets, and then also 87.50 for the profit targets as well. So let's see. I think that pretty much, that covers it all for me. Let's go ahead and pass it to Darren. Let's get his thoughts on dollar Swiss tonight.
All right. So you already know on high my moving average is. So just like how Tiberius even said when he first started, like he loves watching dollar Swiss. We've watched dollar Swiss for literally years before we even began this. So he's very familiar on the direction and what levels pretty much are tested or retested and so forth and so on. So I would have to just kind of, just based on, kind of basically follow the guidelines on pretty much what he says. But let's really break this down and, chart up and make our opinion based on what we see and not what we think. So, like we said, we think that we know for sure we're going down. So let's do our top-down analysis. So, like we see right here, the market played very closely to the dollar for a while, probably for 5 to 7 years. It stayed around that dollar area until we finally got that consolidation broken. Just actually recently, we got the break, and then we got the possibly coming up to do a retest. And this is on the monthly, and I feel like that low where that wick is at the bottom, right where you have, Yep, that wick right there. That price level right there is actually a very strong one because if you follow it all the way to the left, there's tons of wick rejections there, whether going up or down. So since that level got broken and possibly and not possibly, it definitely came up and retested it. And I feel like I wouldn't really just look or base it just on that wick. Like I said, I like to go over to the line chart really quick. And I do that because actually when we do it this way, that wick that we were looking at is no longer there. But when we see the other low, it looked like it came up to that low perfect. No, the one over here to the right. Yep, that one right there. We got that low to be broken and it came back up to retest it. So it's actually looking like it's pointing or showing momentum of going down. So with that right there even being set on the monthly, I would have to kind of stick to the sell side, but let's not jump too fast. Let's drop down to the weekly and change it back to candle. So on the monthly and the weekly, we have the 20 below the 50. We got the market to definitely come back up, cross over both moving averages. Kind of had people thinking that the market was going to go up because it broke that previous high area right over September. We got that, I think maybe like a so-called quote unquote false breakout in which it went up, and a lot of people probably thought when it came back down to retest that level and probably wasn't patient enough or didn't even pay attention how strong that red candle was, because without that strength candle, to me, that red one, that it wouldn't even had enough momentum to go down. So with if I would have had to wait, even though this is the weekly candle, excuse me, the weekly chart, I would still have to wait till that one candle was complete. If I would have seen this one candle complete right here, I would automatically have to rule out the up move, and I would just understand we're in a very, very strong supply zone, and that we buy low, sell high, and we're sitting at a very high area. So the market came up, back up. Came up, flipped, did a false little breakout, came back down, crossed over both of the moving averages again, and then we're still kind of pointing down. So let's drop down to the daily. So the daily right there kind of still, we have a good story, which means that everything is lining up as in terms of the moving averages. We have on all three high time frames, the monthly, weekly, and the daily, we have the 20 below the 50, which lets us know that the bears are in control. But even though we are in such a strong down move, we never want to sell in at a low price. We always want to try to sell in, or buy to sell in for a higher price. So, and I think I've said this tons of times. Anytime when I see the moving averages cross that particular area, that one area sticks out to me automatically. So unhide your signals. So actually, can you make a little box right over where the 20 and the 50 cross? But actually, I wanted it to extend over. I wanted to start from over here and go over here, because I think the cross lines up with a high over here. So as I said, probably move. Yep. We'll move the chart over a little bit and bring it down. Fit it in. Fit the chart in. Okay. And see go to where the things actually cross, because I think it's at the top of that high. So move that zone up to the cross. Yep. Let me see what it looks like. Yep. Well, actually, now I can see. Bring it down just a little bit. I just want those highs to hit it. So perfect. Even though that's close enough, but that area where the moving averages cross, that area always sticks out to me, and I always like to put a zone around that area, because 8 times out of the 10, the market usually comes back to that area for some reason. If it doesn't come to it exactly, it may push through and not go to that particular price, but that area always ends up finding a ceiling and the market struggles. So with that being said, we have a nice little blueprint right now So we have all the things lining up saying for the sell. So we should now know we're looking for higher prices to hop in for a sell. So with that said, I think let's hop down to the 2 hour. And the area where we at right now, we're in low. I don't even know how to say it. Like low price areas where the and move the market over. I was or something. Okay, I guess none of that can fit in. Oh yeah, I wanted that to kind of fit in. Yeah. So kind of where we at. Go to the 4 hour, I guess, because I guess it'll fit in better with the 4 hour. Yeah. So where we are right now is kind of lined up to uh quote unquote previous high prices that the market was at previously. Because if you take all this away, if you go over here to 2021, the top of those wicks, yep, was a previous high of the market before any of that happened. Even though the price to the left is higher, but you know what I'm trying to say. So let's zoom into where we are right now. So now that I know that we are looking for sales, and the market usually likes to come back to prices in which it, struggled with, or either previous low or previous high, I would have to kind of go first. The market coming up to this purple zone. Yep, to that purple zone, finding resistance, and then we can possibly make it way down. But if that market does break that area where we are right now, just because it's very, very close, I think that we would have to go off the next lowest level. And that's right where the green line is. So if we follow that green line all the way over to that low area, that would be the next area in which I would want the market to find resistance to continue to go. Excuse me, resistance. What's the other one called? Support. Gosh, I couldn't get that word. Um, gonna find support. So pretty much we're looking for it to come and run into that ceiling. So we're pretty much all these lows you see coming all the way down, we're gonna kind of use those areas as duality levels in which the market could possibly come to and make a reverse. So I think right now we're just looking for sales only, and we're trying to go off of previous low levels because we're going down. And I don't know if we said this in other streams that when we're going up, the market typically likes to come down to previous high levels. When the market is going down, the market typically likes to come up and touch previous lows. So we can kind of use that as a guidance and a framework. So that's why I say you have to be patient on when the candle closes, because there are times where you have false breakouts like that one we seen. I don't know what time frame it was, but it was definitely this one where it came up to that level, and I think it formed two candles above that area, but it wasn't patient. There was no higher highs being formed at that particular time, and then the market reversed and came all the way back down. So I think it's all about being patient. So let's drop down to the 45 minute. Yeah. So um, go to what price level is that where it lines up right over this 21st area? Yeah, what's that? The bottom of the bodies. No, no, no. Yep, the bottom of those bodies. What price is that?
89.58.
89. Give me a quarter level. 60.
50.
89.50. Um. So even though that's kind of very, very close to where we are right now, let's take it. Let's go to the hour, because I think we can't really see that low level like we've seen before. Those lows. So yeah, so the first one is that one like I just said, and go to up to the next lows. Yep. What price is that?
89.66.
Give me a quarter. 89.75. You think?
Nah, it's kind of far. Well, that's the top of the zone, so yeah, you can use that.
What? 89.75.
Yep.
Um. But what is that? What price is that at the bottom of those lows?
Right here.
Yeah, 89.65.
Yep.
89.65. So the two levels I'm looking at are the 89.50, the 89.75, and what's the one you just said? 89.65. So those are pretty much areas I'm looking for the market to come back up to higher, and find support in order for the market to continue its direction to go down. Lastly, let me say, what price is that? So where we are right now, that high area right over the 50. Is that a price? Yeah, is that a price level we have already?
Yep.
89.75, right?
Yep.
Okay. And what come down to the bottom of that? No, the bottom of the zone. I mean, I'm sorry. I have 89.65. And the top of the zone is what?
75.
And what is the green line? I think that's the last one. So actually, don't go to the wicks. Go to the top of the bodies. See if you can find me a quarter level.
No, not really.
All right. So give me just the top of the bodies then.
That right there is 89.88.
89, 88. Could 89.90 fly?
Yep.
All right. So 88. Excuse me. 89.88, right?
Yep.
And then I'm gonna put 89.90. So those pretty much. So that's why I always put like a zone. I don't know if you guys know that, but that's one of the reasons why I always put a zone, is because I don't want to ever stress about getting one particular price. You notice how I kept asking what price is that exactly. That's why I put a zone, so you don't need to have that particular price, but it kind of gives you a list of prices in which you can get in that is still guaranteed for you to get in and get in a high probability trade. So let's lastly, before I sum this up, go to the 5 minute one last time. What prices is those double tops? 89, 557, 8957 0. Yeah. So pretty much, yeah. So pretty much, to conclude, I'm pretty much going to stay on the side of the short for now, until I see higher highs and higher lows and signals of the bulls trying to step back into the market. But all in all, I'm going to stay on the side of the sell, waiting for prices to come up to any one of these areas in which I listed. And I'm going to say them one last time: the 89.50, the 89.75, the 89.50, the 89.88 slash 89.90, and 89.57. So those a huge list that you can be patient and kind of set orders, or a little sketch on how the market could react when it gets to those prices. So all in all, I'm all in for the sell, and that's my analysis.
All right, there we go. That covers it and wraps it up for Dollar Swiss. So with Dollar Swiss and US 30, make sure you keep your eyes on these this week. I only bring pairs to you that I know are moving, and these pairs will be moving this week. So that's half of the analysis that we have lined up for you guys tonight. I'm gonna pass it over to Darren right now because he has about two pairs that he wants to cover for you guys. So let's pass the torch to him and let's get some more knowledge on what we need to look for this week.
All right, so for you guys who are kind of new to the stream, the two pairs I like to stick to, or I've become to love over time, are AU, which is Australian, and the US dollar, and gold. I was looking at GJ, but I've been noticing that GJ and AU kind of had like this correlation thing going on, and then I felt like it got really confusing on me when I seen it, because sometimes they look so similar, but necessarily they didn't move in the same direction. So I wanted to find something a little bit more that followed structure, which gold does. So I'll go over that when I get to it. So for right now, we're definitely just going to go over AU. And I think the last time we were here at AU, we were on our Friday live session, and I think I said I put this short position in to see the market go down. But as you can see, I did get the market to come down. I did get a nice little entry, but I did not take in consideration that we were at lower prices and that this is a strong, very strong demand zone in which people want to buy. So I didn't take my time and review all the things that the market was showing and kind of just like not pretty much looking and waiting for my confirmations. So with that being said, we now we learn from all of our trades. So let's actually start at the monthly because we do the top down analysis. Let me move this over because this is kind of getting in the way. Let's start monthly. Monthly. All right. So really quickly, like I said, we're just pretty much looking for uh, an overall direction in which the market is going. So we're just trying to get on the biggest time frame that the market has to offer. We want to determine and see where the market is going as a whole because it's very easy to get yourself stuck on lower time frames, trying to fight the trend when in actual reality, if you'd have looked at the higher time frames, you would have knew that the market was going in this particular direction. So let me just not ran off. I'll save some of that for traders talk. So the 7 is below the 65. We've been in this consolidation area for some time now, probably ever since the beginning of 2016. We've been in this kind of consolidation area in which the market has been kind of just staying in, hovering around and playing around in, and not really been making higher highs and higher lows. And I think, like we said before, this little pink zone up the top is pretty much a zone we would need the market to break for us to even begin to even look for buys. So like that is just only one confirmation because this market, you always want to play the market on what you see and not what you think. So let's drop down to the weekly. So the 7 is below the 65, which means the bears are in control. We drop down to the weekly, and the weekly is kind of showing like the same thing. We hit these previous high. Hold on right quick, all right, bro. I gotta take this. Hold on. Give me 1 second, guys. All right, we back. We back. Sorry about that. So we have this double top up here that we were kind of looking for the market to kind of come up and break, but as you can see, the market just came right exactly to the bottom of our red zone and began to push down. But it did not break this so-called flag's resistance because, like I said before, this kind of looks like a flag formation. And it looks like it has been forming this so-called flag formation for a while. It looks like it forms a high, comes down to the flag's support, or excuse me, resistance, and then it shoots up. Does the same thing, does the same thing. So I think that we're kind of looking for the market to kind of do the same. So I thought I hit. So pretty much it's a dead smack in the middle of this consolidation zone. So we're just really in an area right now where we need to be patient right now overall. And being that the weekly moving averages, the 7 and the 65 are not correlated, which means they're in the same direction. The monthly shows the 7 is below the 65, but the weekly is showing the 7 above the 65. And I said before that Anytime you see unfluentness or the same direction, uh, 8 times out of the 10, those trades that's being made at that moment are not high probability trades. As you can see in our in other pairs, that anytime the moving average is the 7, I think the dollar Swiss, you can see how the dollar Swiss, the 7 was, excuse me, his 20 was below the 65 or above the 65 on all three markets. So that let us know for sure that the market was in its direction we determined. So in this one, it's kind of safe to say that we're still in a quote unquote retracement pullback uh, movement right now. And being that we are going up, a pullback would have to be the market coming down, retesting previous high areas in which the market struggled before. So as just looking at it just bare face, you can see that this high right here that's formed at the 24th could be a potential high in which the market could come down to and retest. Or the market can just do what it previously just did, which was come to this high. Excuse me, hold on. To come down to this previous high, because if you take all this away, this was actually a high the market was at in a past or in the past. So being that we got that test right here, this could be an area letting us know that one or two things can happen. The market can either come back down to this quote unquote neckline or low area, find respect, and then it's going to continue up like it has been doing all the way 1, 2, 3, 4. Well, it's not the fourth, but 3 times. So it's 3 times that it's letting us know that it comes up, makes a high, comes down to retest previous high areas in which it was at in the past, and then it continues up. So we have to definitely keep our eyes peeled on this low level right here at the bottom. So let me unhide my signals. Let's drop down to the daily. So the daily time frame is aligning with the weekly, and the weekly shows that the 7 is above the 65, which means the bulls are in control. So we have to find more confirmation signals because the monthly is showing that the 7 is below the 65, which means bears are in control on the highest time frame. But the weekly and the daily are showing the 7 above the 65. So I feel like we need to be a little bit more patient right now and wait for its pullback to complete before we decide to hop in on its original direction, which was up. But you can notice where we are, kind of where we are right now. The market is kind of far from the 65 moving average. And like I told you I keep saying that. I say I'm sorry to say I gotta find like a better way to say it, but anytime you see the market gap, because I said this in our last stream, that anytime you see the market gap like that, the 7 is gapped away from the 65, the market tends to find not necessarily the 7, but the market to find its way back down to the 65, find resistance down here at the bottom, and this will be the low enough price for buyers to want to get into this market because you want to buy low, sell high. Where we are right now, you wouldn't want to buy because we're sitting in high priced areas in which the market showed high prices compared to the lower prices that the market came down to 2 times. So could there be a third time? Is a third time really a charm? So let me take some of this stuff away. This red line away. Take over these green joints. I just want the zones. Let me take this off. This off. Okay, so pretty much what I'm just trying to highlight is putting a zone on higher prices in which the market was at previously in the past. So I'm just trying to line up a nice duality level, when highs and lows kind of meet. Those are our duality levels. I want to kind of highlight that area because I pretty much think I want to see what happens when the market comes down to that particular area. So if we are retracing right now, we're pretty much retracing and waiting for a short move to happen down here in order for the original move, which was up, to continue. So if we're going to, so okay, let me just say this before I even go down. I'm going to stay to the side on this one and wait for a little bit more confirmation, but I can definitely go over both buying and selling. So I think for the first one, I'm just going to go over the selling. I feel like selling right now is could be a possible idea just because we're sitting in higher priced areas where these wicks are just sitting in. Never had any momentum to break it. Like it was a false breakout up here at the top. But if you would have been patient, you would have seen with this strong red candle, the market just pretty much came back down with a vengeance and just found resistance down here. So I think that if we're going to sell, I think we want to wait for prices to shoot up because we never want to sell in at low prices. We want to try to get the highest buck for our product or whatever. So we would have to kind of highlight or look at these higher prices up here because every time it comes to this particular priced area, the market turns around and heads down. Not exactly every time, but we have one. No, excuse me. We have. Let me take this away. We have 1, 2, 3, 4, 5, 6, 7, 8. You know, you get the picture. The prices come up to that particular area and goes down. So let me just put a little green zone because that's going to be my activation. Actually, I should make it red. What's another good color for selling? I know red is like, for me, is. Where's my color box at?
It's right there.
Where?
Yeah. Click on it one more time. All right, one more time. It's just, yeah, it's at the bottom. You see it all the way at the bottom.
Oh, jeez. So, if we're going to sell, we want to make sure we're selling at high prices. So, we would want to wait for prices to come into this red zone, find support, and wait for the complete closure of the candles that come into this particular area, and then make your move to execute. Let's drop down to a smaller time frame really quick. Managing all in right now. And as you can see, we're smack dead in the middle of a zone or a strong supply zone. You supply, you buy, so a nice supply zone in which that the market could possibly find a struggle or a denial, and then this could be the area in which it can go down. So, two things: sellers, if the market can't break these double tops or this particular zone and uh, finds resistance, support, you want to wait to first wait for it to reject here. You want it to break these moving averages also, and you definitely need to be patient and wait for this low at down here at the bottom to be broken because it's very possible the market can just come back down to the bottom of structure and then continue on whatever direction it was going to go. So sellers right now, where we are right now, is very important. So I think right now could be a setup waiting to happen for a sell. Buyers, obviously, we want to buy low, sell high. We're sitting in very high prices in which the market has shown in the past. So honestly, if we didn't get in down here at the bottom of this duality level, let me get another zone. I'll make this one green. Okay, so if we didn't necessarily get in at the bottom where this wick hit exactly, because it came back down exactly to these highs where it lines up with these lows perfectly, and it shot straight up. So I think honestly, as far as buying, we definitely missed the boat on that one. We're like long gone, missed that boat. So in order for us to want to hop in for a buy again, we would need the market to either one, break this high up here, come back down to retest this area, and then take it up maybe 20 or 30 pips. Or you can wait for prices to reject where we are right now, wait for prices to come back down to these last lower levels or this high. Well, this kind of high, and also these wicks over to the left. But pretty much this little section here, this is pretty much the zone. So if it comes back down into the zone and stays above it, then that would be our key to hop in for the buy. And the way this strong candle is forming, like I said before, we're not taking heed on how big that candle is. That's a very, very strong green candle, aka bull candle. This might not have enough momentum to come back down to retest. So I think you definitely want to be patient on this one because you never want to just hop straight in. You kind of always want to wait for a little pushback or a retest to come back down to previous prices and which lower. So I think it's safe. Let me put up some prices on it. So for I didn't even say another price. Let me review some of the areas that we should take heed. So for buying, like I said, if we didn't get in down here at 77 77.37, we missed that boat. If we didn't get in also at this price of 77.50, yeah, if we didn't get in at 77.50, that was also whistles. So those are the two prices we would kind of keep our eyes peeled open for the buy. Let me write that down. Hold on. 77. What price did I say?
You said 77, right?
77 what? Did I say 77? So the first price would have been this one down here, which was 77. $7,737.5. So this is AU. So I said 7735. 7737. How about 7737? So 7737 for a buy. Another one would have been 7755. So those would have been pretty much my two levels to get in. But this zone is also pretty much safe too. So it's tons of prices in between here. That's for my buying. And for selling, the areas, like I said, we always want to buy low, sell high. We're pretty much waiting for a rejection at this particular area to come back down. So we're going to probably use the top of the bodies, which is 77720. Yeah, so you want it to pretty much find find support here and shoot back down, or you can get the price at the top of these wicks here where it lines up with the 65 moving average. If we can get that 75 moving average broken, because you definitely don't want to hop in too quickly. So we're gonna say 77.60. 77.60. And last but not least, 77.50. So just to recap, buying we're looking for 77.37 and 77.55. That's for buying. And selling, the three areas that we pointed out was 77.720, 77.60, and 77.50. So, I think, like I said, overall, I would be going with the overall direction, which is the monthly, which shows that it's an overall down direction. Let me just make sure I'm saying it right, and that is it. Yeah, I'm kind of just staying on the side of the monthly just because ever since this high up here, we've just been making lower lows and lower highs. There's really hasn't been any big break in structure as far as these double tops. I think, like I said before, if these double tops are not broken, we shouldn't even begin to even look for buys. I mean, you can get 20 or 30 pips here, but I'm talking about high probability trades. So um, it's very possible to definitely get 20 pips on both sides. And I think that's definitely one of the main reasons why I'm definitely going to kind of stick to the side on this one, just because I can strongly argue both sides of the coin. And anytime I can argue both sides of the coin so strongly, I would have to stand on the side and wait for that one confirmation to separate, whatever the directions of buy and sell. So I know I've said a lot. Ty, man, give me some of your thoughts. What you thinking?
All right, so let's start off by pulling AU up to the daily chart, and let's start the analysis from that point.
And hide everything, right?
Yep. So when we look at AU, I like some of the points that you touched on earlier at the beginning of the analysis where you were talking about the overall uptrend, at least on the daily chart and the weekly chart, because on both of those charts, I think the 7 is above the 65. So that's indicating to us that on the relatively lower time frames compared to the monthly, things are moving up. But on the monthly, as we saw earlier, things are not lining up that way. So that tells us that right now, the overall trend, like Darren said, is still down. But right now, we're in a temporary retracement. So I've learned from, a whole lot of mistakes that when the overall trend is one thing and the retracement is happening, I just got to trade in line with the retracement. So I like how Darren was talking about, I think that level, what's that level right above April? So yeah, follow that up, and you see that, yeah, that little consolidation area. What's the top of that? The top price.
Top of it.
Yeah.
76.50. Yeah, we'll just say 50 just to be safe.
I like that level right there because I know when we looked at it on the weekly, you were talking about the flags, and let's actually go back to the weekly for a quick second because
Is that the weekly?
because what I noticed was that the last time prices made a big move up, so I think that happened in like between May, well, actually closer to September of 2020. So go back to that top.
Which one?
September 2020. That one. So everybody pay attention to how prices moved up to that point in particular. But then for maybe the next 10 weeks, they pretty much trend, or even longer, they trended all the way back down to the moving average of the 65, made a double bottom, and then they moved up. Now, once they moved up, they had their move, right? We've already established that. Now we're in another consolidation type of zone. So I'm figuring that more than likely this thing is going to continue up, but only after it comes back to test a major level of support. So that's why I say I like that level at I think it was 76.50. So let's break it back down to the daily. So now we can get a really good understanding of everything we just looked at.
See that one more time?
So let's get back to the daily chart.
Daily. Hold up. My fault. Alright.
So I think that if prices are going to move in line with the overall trend, like we've always told you, we don't want to buy higher prices. So by default, we either have to let it come back to 77 even if you want to be aggressive, because right now that's where the demand zone is. But if you really want to catch the best price, I would say 76.50, because that way you can get a potential maybe extra 30 to 40 points just by having a great entry. So for me personally, I would say if you want to do anything right now, you gotta stand to the side because we're in a consolidation. There's no moves to be had until something happens. So until that point, I'm leaning towards the long, but until I see what I need, I won't be doing anything until that time.
Okay. So I think I had a question. You said so pretty much you're gonna stay on the side of the buys. That's what you're
Yes.
saying.
Yeah.
And what were the couple of levels you were planning on waiting for the market to come to for you to want to execute a buy?
I would say that 77 cents right now is the most recent demand zone. So we should definitely expect some type of bounce from that level. But I will say that if you're expecting a bounce to maybe hold it all the way back up to the top at 80 cents and take it back up to that level, you'll probably be better suited getting in at something like 76.50. But I like 77 even because that's the most recent demand zone for sure.
Yeah, it's a nice little 60, even if you just do the bottom just to the top of the wicks. So you would take it from down here back up to here, or
I
down
would take
here.
it back up to 80.
Oh, so if you get in down here, you getting out up here.
Right.
You wouldn't get in get out at the top of the bodies, or you take wick getting all the way to the wick.
I'll have to see what prices are doing as it comes into it and then play it that way.
All right, so you said 77 flat, and what was the other one?
76.50.
76.50. So there you have it, guys. Two analysis of AU. We said plenty of times, two analysis is always better than one. You know, both of our opinions gives you a chance to, look at the market in two different ways at one time. So with that being said, we're gonna wrap up our regular live analysis, and we're gonna smoothly move right on to into our exploration section of the show. Like I said, that won't be our name, but for right now, we're just gonna rock with it. The exploration. The exploration pretty much is a section of the show we added personally because we sat down one day and was like, you know what, man, we should definitely go over more than just forex. We should definitely give the people more and expose them more on what the financial market has to offer and as a whole. You have forex, you have stocks, you have bonds, you have CFTs, NFTs, all type of stuff. So I think tonight we're gonna just kind of recap on what we did on our last stream. And if you guys don't remember, we went over Treasury bonds. Treasury bonds are where's my notes? So yeah, Treasury bonds are pretty much government debt securities issued by the U.S. government. They have maturity dates, like if today is the 25th, the expiration could be 2 to 3 years from now, or in this case, greater than 20 years. So we are now in 2021, so somewhere around 2040. So those are the type of maturity dates these particular bonds have. So the way people make money off of these things is that they make uh, they earn interest off these treasury bonds from holding it. So over the 20 years, you're getting this interest rate, and on that maturity date, you'll cash in your bond. You'll get your interest that was earned off of your investment. I think your initial investment. And I think what else did they? Just those two, right? The interest and the initial investment, right?
Yep.
And that's how pretty much those bonds pretty much works. Um, so pretty much this relationship between bonds and forex is pretty much the U.S. dollar. We're going to use that U.S. dollar as kind of like a tool on pretty much, whether how the bonds are doing, uh, could possibly let us know what's going on with the U.S. dollar, and whatever the U.S. dollar is definitely going to impact any currency pair that has USD in it. So for AUD, if the Treasury bonds were, hold on, let me grab my charger. Hold on, guys. So if the Treasury bonds impacted the U.S. dollar in a negative way, that means it, like I said, any pair that has AU in it or the U.S. dollar in it is going to have a negative effect. Um, let's see. So the yields. So like I said, yields are pretty much the interest made or the interest made off of the bond. So the bond yields actually serve as an excellent indicator of the nation's, excuse me, indicator of the strength of the nation's stock market. The stock market and forex, they kind of go. I'm not gonna say exactly hand in hand, but you can definitely, if you try, find some similarities. But when increases, what it means, let me read from the beginning. Bond yields actually serve as an excellent indicator of the strength of the nation's stock market, which increases the demand for the nation's currency. For example, if the U.S. bond yields gauge the performance of the U.S. stock market, so pretty much I think the higher the yields are on bonds, the better the U.S. dollar is doing, and I'm assuming vice versa. If the yields are lower on the U.S. dollar, which would probably weaken the dollar, which would cause any pairs that has the USD in it, would cause it to have a negative effect. So that's pretty much just just a little the fundamental of bonds, because any type of financial market as a whole, you have to know exactly what you're investing in. You just can't invest into things just because you want to make some money. You have to know and understand the operation. That's like trying to make a sandwich, or that's a bad idea. Pretty much trying to drive, but never was taught how to drive. Like it just doesn't go. So um, let me pass it over to Tiberius, because he's going to go more over the technical aspect of it, the actual chart of it. So they both fundamental and technical do go hand in hand for some particular markets, like the stock market. Those fundamental indicators definitely are needed, because you're going to need that fundamental and technical together to give you that information or tools needed to trade stocks at a good rate and have high probability trades. So I'm definitely going to pass it over to Ty, and he's going to just kind of recap over the technical about these treasury bonds.
All right. So there you have it. Not like Darren said, not only do you need to understand the fundamentals, but the technicals matter as well. They go hand in hand. Now, if you're on a day trading type of vibe, maybe you don't necessarily care about the fundamentals unless the news comes out that specific day. But when you're holding positions for the long term, for weeks or months at a time, or even years in some cases, you need to have a deep understanding about the entire market that you're trading, what moves it, what affects it, and what you need to watch out for. Because as a trader, you can't just buy something and then just leave it alone. You got to make sure you stay up on game. So understanding those fundamentals and technicals, like Darren said, is super important. Now, for the technical perspective, it's just like analyzing anything else that we do here on the charts. The same concepts apply, the same price action principles. And for me, one thing I want to highlight to you guys and talk about bonds in terms of technical analysis is how to use it to actually help you manage your overall stock portfolio if you have one. Because overall, we come here, we talk about trading and whatnot. But the overall goal is for you to stack that money up from trading and then put it into the long term investing because, truth be told, that's where the real money is. You just have to have a little bit of time on your hands to see that money grow. So, in order to protect your money when the market crashes, you need to look at the relationship between stocks and bonds. And we talked about this a little bit on Thursday about how they pretty much have a negative correlation. Stocks are up, bonds are down, and vice versa. Bonds are up, stocks are down. So you can actually use that to your advantage when the market is selling off. So let's say the market ran into a period of, unexpected turmoil like last year when the pandemic came out of nowhere. Nobody was expecting that. So if you see things like that starting to form and starting to take place, you're starting to say to yourself, hold on, if this is driving market prices down, I need to protect the value of what I have in assets in the stock market. So for a lot of reasons, especially tax regions, people can't really sell the holdings that they have in their stock portfolio because they got to pay this tax, that tax. So they can't sell it. So they say, look, I can't sell my stuff, but I need a way to protect my money. Well, if you have a negative correlation where one thing goes down, the other thing goes up, you buy the thing that's going up while what you own is going down. So the whole time that the stock market was falling, the bond market was going up. As we can kind of see from what I'm going to do is I'm going to bounce back and forth between US 30. Actually, what I'm going to do, I'm going to actually pull up US 30 so we can compare it, just so I can show you guys what I mean. So this was the crash from 2020. Notice how when the market was going up, the market is this orange line. When the market was going down, when the Dow Jones was crashing, we come to the same point where that crash started. Look at bonds. The bonds are the candles. So when the market starts going down, US 30, the bond market had already been moving up. That's the crazy part because the orange line is US 30. Remember that. The whole time that US 30 is gradually moving up, the bond market was also moving up. So I think that's what's that called? Hold on. I know the word. It's a word, divergence. Divergence of correlation. Basically, when you have one thing that should be moving opposite, but it's moving in the same direction. So if you were able to actually catch the bonds moving up, you would have been able to say, you know what? There might be some trouble in the stock market because bonds are still moving higher, even though stocks are moving higher too. And then boom, that's when we have the crash. And that's when the uptrend in bonds continued as the downtrend in the stock market continued. So the whole time that you were seeing this thing play out and you want to protect your money, you say, okay, stock market is going down. You go over here and buy some bonds. And then it's the opposite scenario once the market starts to recover and starts to go back up again. So check this out. These were the bottoms back in March 2020 last year. The orange line represents the Dow Jones, aka US 30. Now, for a while, bonds and the stock market moved in the same fashion. They were both going up for a while, which was very different, but eventually that correlation kicked back in. And around September of last year, the market kind of consolidated as the bond market just started going down and down and down. And then we see US 30 pop up and we have a huge up move. Also correlated by a huge down move in the bonds. So that right there is how you protect yourself. When one thing is falling, the other thing is rising. And don't forget that because a lot of times I think the problem with us as traders and investors sometimes is that when things are going down, we panic. No, no, no. On this channel, we come here so we can learn what we need to do in the market so that when these crazy situations like 2020 come around, we don't panic and sell everything like, oh my God, the world is going to end. We say, hold on, stock market is crashing. Oh yeah, the boys over there at the Bison trading show, they told me that if the market is crashing, bonds should be going up. So let me go over there and buy that. That's the overall goal, and I hope we were able to just shed some light on you guys tonight when it comes about bonds, when it comes to bonds, because we talked about it on Thursday, and we want to make sure that you get a thorough understanding, because bonds are extremely important today, 30 years ago, and 30 years from now. So keep all of this information in mind, and I'm going to pass it back over to D to get his closing thoughts about bonds in general.
So with that being said, the bonds is just another avenue of the financial world that is there to be utilized to make money. Like Tiberius said, you can make money in a pandemic if everything lines up and everything is equal. If we're going through a strong distress in the world right now, bonds would be possibly the best thing to buy in. But in order to know those type of things, you have to be exposed to that information. That information is key. Key. So that's mainly why we added this section, just to give you that extra information about the financial market. We don't always want to just every day or every week we give you that AU Forex pair. Yes, we follow it and give our detailed analysis, but it is always very, very well to expose and talk about other things. It's so this I swear this financial world has so much money to be made, and that's pretty much our goal, is to talk about as much things in this section as possible. So just to wrap that up, guys, there you go. On both sides, if things go bad, you can buy in on bonds, but understand that they have maturity dates, and understanding the rules are very, very important, because I think if you don't cash in on it on that maturity date, what happens when you don't cash in on that maturity date?
Well, for the bonds, they just give it to you automatically.
Okay, they just give it to you automatically. So yeah, everything has rules, man. So look forward to definitely hearing more financial things that we've come together, me and Tiberius, to talk about and to share with you guys, because there's so much to learn, man, and we just want to just give you as much knowledge as we possibly can. So that's pretty much our wrap up for the exploration section. So let's definitely move in to the best section, my favorite section of the whole show, which is Traders Talk. So I think the number one thing, man, I want to expose to you guys, or even tell you guys, is that um the financial world has so much things to offer, man. It's just literally information that just has to be exposed to or hear once, and then everything else will be history. But if this is information that can, set your family straight, you and your family and generations after, set for life. Mind you, this stuff is not new at all. Some of this stuff in financial markets has actually been around since the beginning of finance, like the 1800s, or even farther back then. But everything was manual. So this information has been readily available for a long time, and it's just, since we've been exposed to it, we definitely want to share with as much people as we possibly can, man, because we're just all about dropping the real about what it is to trade. Just because trading has such negative things, especially forex, attached to it, and we just want to show you the real deal on what trading is all about, the ups, the downs. We want to show you the work that needs to be put into this type of thing to be a successful, consistent trader. There was one other thing I wanted to say. Definitely though, that information about false breakouts. I think we definitely need to do a class on false breakouts, because that is very important, because a lot of the times traders are not patient in waiting for the one complete close of that candle and understanding the level in which that candle was formed, meaning how big was that red candle? Was it like a big diesel candle? Anytime you see a big diesel candle like that, you can definitely best believe there's going to be a few more red candles coming thereafter. It may not be that size, but definitely some more red candles coming after that. So you have to definitely, one, be patient. That's always number one. Two, you want to wait for the complete close of that candle. And three, just understanding the direction, or excuse me, the level of those candles. So you guys should definitely take some time out and look up the strength of the candles, and which ones are the strongest and which one are the least strong. Because I think I said in plenty other streams, anytime you see a candle that has like a skinny little body right dead in the middle, that's a neutral candle. That pretty much means whatever direction or whatever position who was in previous control is still in control. But that's knowledge you have to go and figure out. You may be a couple steps ahead of a lot of traders that don't take that time to build that fundamental aspect of it. It's like you have to really learn your basics. Like it's almost like learning math. You cannot do, strong statistics and all that advanced math without understanding the addition, subtraction, multiplication, and division. Without those four basic structures of math, everything else in math will be very, very confusing. So it's, the same thing, mirror thing with this. You have to understand those fundamental basic things to follow, because the market is going to tell you exactly what it's going to do. You don't have to guess. All you have to do is just look at the history of it and it'll tell you exactly what it's going to do. So Ty, tell some of the people you want um, to know and take away from tonight's show.
Well, I just wanted to piggyback on what you said earlier about really just gaining more information in the markets, because like you said, this information has been around for years, even back when people had to do it handwritten. People didn't always have digital charts. They used to sit back, get the closing price, the open price, the high and the low, and draw their own candlestick charts on graph paper. So the information is there if you're willing to go out there and get it. And I think a lot of times, like sometimes investing and trading just in general can have a negative connotation, especially like Forex, like Darren was saying earlier. But at the end of the day, it really just comes down to information. Forex is just one financial instrument that you can trade. And with our financial exploration series, we're coming and we're showing you all types of different vehicles that you can trade. Not only just Forex, you can do stocks, options, bonds. We talked about futures. So it's a whole list of things. And I just really think it comes back down to information, because there's something in the market for everyone. Forex trading might not be for you. Futures trading might not be for you, but maybe stock trading might be, or maybe option trading might be, or bond trading. You never know. So, me personally, just to give a little short story, I started off trading Forex. I initially wanted to trade stocks. I was like, man, you kind of need some money to do that. So let me go over here and trade Forex. But little did I know, you could actually trade the Dow Jones as the number was moving if you traded US 30 or you traded Dow Jones futures. I only figured that out once I was exposed to the information. If I had never been exposed or sought that information out, I would probably still be stuck where I was. Or worst case scenario, I just learn it at a much later time in life. So saying that to say, you gotta keep researching and researching and really just taking deep dives into the market to figure out what you can find. So hopefully this series that we have can be the jumping board to help you get into that exploration and really find what works in the market for you. So I hope you guys really appreciate what we do for you. We try and come and put together a whole lesson, like really break it down for you. So thank you so much for rocking out with us, man. We love you guys so much.
All right, there you guys have it. Like we can't express.
I think with that being said, for the most part, that wraps up what we have.
So my drum was on mute, bro.
You was on mute.
Yeah, I was on mute, bro. I was saying that whole conversation, bro. I hate doing that. All right, guys. I didn't mean to beep you, but yeah, guys, we really appreciate you guys for really coming out and supporting us, and really hearing out our lessons, because we really sit down and try to craft these lessons in a way where, the simplest, people could come in and we try breaking it down to the simplest form, and giving that advice to traders, new traders like myself, or like myself was that information that could have been passed down to me, or someone that could told me. So I want to be that avenue for the new traders. So with that being said, thank you guys. Please tell everyone to follow. Please hit that follow button. Go over, check our YouTube channel, Bison Trading Show. We have our catalog. It's definitely building by the day. We're organizing it. We're going to try to really turn it into a nice body of work, and do something with that. You can definitely hit me on my personal IG page at IMDGUY, at I'm the D Guy, or my business page, which is at Pearl_Financial_LLC. So Pearl_Financial_LLC. Or you can definitely hit my boy Tiberius at his links at.
You guys can make sure you follow me on both Instagram and YouTube under the name Ty Trades Futures. Over on Instagram, I do this series called Trade of the Day, where I break down one of the charts that I traded today, and I tell you exactly why I took the trade, what made me get into it, whether it worked, whether it didn't, what I learned from it, and what I feel like you can take away from it too in great detail. So make sure you follow me on Instagram to check that out. And then on YouTube, I'm streaming live Monday through Thursday. It's a new video up right now. Make sure you tune in tomorrow morning, 9:15 or 9:20 Eastern Standard Time AM, and catch the stream tomorrow too. And of course, like Darren said earlier, make sure you go over right now to that Bison Trading Show page on YouTube. Check in, subscribe, like our videos, man. We have a lot of content over here, as you can see, like 1, 2, 3, 4, 5, 1, 2, 3, 4. We have about 20 videos up right now. So if you haven't had a chance to check that out, slide through. And of course, make sure you pull up on us on Thursday, once again, same time, 9:35 Eastern Standard Time, PM. We will be breaking down these charts and showing you what levels you need to look out for, as we always do, try and true. So with that being said, D, is that everything?
Yeah, that's pretty much everything. I just want to piggyback off. Definitely, we're in the works right now of putting together an IG page, so we can drop some content in that and show you some of the classes that we've been over, anything that you missed. So that's definitely in the process. But other than that, man, that's pretty much a wrap for tonight, man. We appreciate everyone who pulled up tonight. We love it. We love it. We love it. Appreciate each and every one of you guys. But for anyone who's been watching this show, should definitely know my next line. Tiberius, take us out of here respectfully.
All right, good people. It's been a good show so far. We hope you learned something. We'll see you again Thursday. You already know what time. Let's get it.
All right. Grr, bow, bow.